Here's a quick guide to what's going on with GameStop. Stick around. Hey guys, warm welcome to you. Alright, so GME or GameStop, there has been a meteoric rise. This thing has ripped. So in this quick, brief video, I'm going to give an overview of what's gone on, what's happened, and maybe what's going to happen over the next few days or few months. So GameStop Corporation, this is a stock, and they own retail stores, gaming stores across the US. And why this has been so significant is that you can see on this chart here, and you know what, let's put it on here as well. This has gone from kind of around $10, it's even been as low as kind of $1 at some point, right up to $3.51 today. Well, in fact, what's the actual high today was $3.54. So we're talking about a significant rise in this company, and you know the valuation now, according to TradingView, is close to, not that it matters too much, 19 billion. Right, so just for perspective, guys, this is a company that, you know, was struggling. It's a retail company, etc., etc., etc. Very, very long-term downtrend, just as a lot of these retailers are. Struggling company, down, down, down we go. Right, all of a sudden now we come into the new year, 2021, and this thing starts to rally from $4 up to $20. Fine, not unusual for kind of these sort of companies to do that. But then what is unusual is this sudden move that we've had from kind of down in the $20 area and just sort of doubled in a couple of days. And you kind of really see on this scale, I mean, because the scale's kind of auto-filling, but this is already pretty significant to go from $20 to close at $31, the next day to be closing at $40. So doubling in a couple of days, something's going on here. No earnings flag, nothing significant. So what's actually happened? So what's happened with this company is they are in a situation where they have a lot of shares held short. Now, according to Finviz, the short float is 140%. So according to Finviz, there's more than the float out short. This is kind of almost a Volkswagen moment. But regardless of what that number is, you know, if it's more than 20%, 30, 40, 50, 60%, those sort of numbers indicate that, hey, there's a lot of people who are short this company. Now, if we're talking 140%, that's a different animal. But the point is, there's a lot of hedge funds who are short this company. They expect this company to go bust. They are betting on this company going bust, just like they do with many other companies. You know, a short strategy is literally, hey, we don't think this company's going to last, and so we're going to short the stock until they run out of money, collect the profit, move on to the next one. Now, let's not talk about the intricacies of how they do that or the efficacy, the ethics around it, that kind of stuff. It's been there for years. It's still going to be there for years. It is what it is. But we have this situation where an internet group called WallStreetBets have kind of got together here and just like the old days and the old bulletin boards and stuff, this is on Reddit, they got together and said, hey, you know what? There's a lot of whatever the short float was at the time they started doing this, and decided, hey, you know what, we're going to buy up We're going to buy up GME. We're going to buy it. Because if we can buy it, we can get together and we can all decide that this is a great investment. This buying pressure will help the stock go up. Fine. It's also low float as well. There's only 50 shares are available in issue. There's not much supply there. Our demand will cause the stock to go up, and if we get it to a certain point, then some of these funds, whether it was 140% when they started, whether it's 60%, whatever it was, are going to have to cover their short position. They're not going to be able to stomach a rise from $20 up to $300 or whatever it is, even $100. And so this is like a short squeeze, a cascade effect. So we have this scenario where, okay, it starts to go, and we just get more and more and more. Now, Melvin Capital are believed to have a big short position. They've recently come on and said that they've closed the position. However, take that with a pinch of salt. They could have just been net neutral when they said that, then gone back short. They could have closed it and got rid of the position. They could have moved it off their books onto somewhere. Who knows what's gone on? It doesn't matter. The point is, people know that this company's short, and now what's happening is they think that, okay, they're going to have to cover that short. They're sitting on a huge loss. Does that mean they're going to cover other positions? And now we see a lot more other stocks that have a high short float starting to rally on the expectation that it could go higher, on the expectation that there's going to be another short squeeze. So that's pretty much what's happened, guys. A group of guys and girls on the internet, traders on the internet, WallStreetBets on the Reddit forum have gone, hey, this is the company that we think is going to do well. This is why we think it's a good bet. A lot of them has a huge amount of millions of people following this specific community. They've got some cash to put behind it. And the argument is some people are saying, well, it's a concerted effort to manipulate the stock. Who knows what's going to happen with that? But from the way that I see it, it's just someone's mentioned it. They're saying they're buying it. It's gathered steam just like any other stock idea. Now, whether someone's lied about things, that's when it's time to look at a different angle of things. If someone's deliberately lied, then that's different. But if they said, hey, this is the situation, it's heavily shorted by funds, it's a low float, I think it's great value. We've also had people, Elon Musk even tweeting about it. We've had Facebook employees tweeting about it. We've had, relatively famous people on Twitter saying they're buying Gamestop. They're going to go long Gamestop. And so it's created this massive hype around it. So these funds that are short have just literally been well and truly hammered by their unrealized P&L. Market's gone high. There's rumors they've had to have funding come in from other funds to keep them solvent. There's rumors they've closed their position. I say they said they've closed the position. There's probably other people short as well. And meanwhile, this WallStreetBets and not just WallStreetBets, guys, obviously it's filtered through to many other retail traders as well, is driving this higher. Now, what's going to happen next? So we're going to get this scenario, I think, and who knows, guys, I'm just speculating, but I've seen this play before, and this is probably quite one of the biggest ones I've seen, but I've seen this play out before. Very often we get this scenario, and the people who are buying this, they're not looking to invest in GameStop for the long term. And that's a generalization, some may be, but this is my perception of it. They are looking to make money, get a bit quick money, move on to the next thing. And so the people buying this could be sensitive to pullbacks. So when we get a scenario where a lot of people who are late to the party, now people who have been in from $30, $40, $20, they don't care right now. They're like, okay, I'm sitting on a huge unrealized gain. Even if it comes back, 50%, I'm still good. So, but there's a lot of people, obviously, to keep pushing higher, will have been buying highs and highs and highs. Now, some of that may well be the short covering. Some of that may well be the people covering the short. If that is the case and the shorts have covered, which, who knows? I mean, this is slightly delayed, the lag on Finviz. I don't know what the actual short float is. If those sensitive shorts have covered, then maybe that's the trade done. Maybe now we're going to start to see it unwind and come back to a fair valuation. Generally speaking, fundamentals, I'm not a fundamental trader, as you know, but they will kind of always, markets will tend to mean revert around a fundamental valuation. Sometimes they're overvalued and frothy, sometimes they're undervalued, but generally that's kind of how they operate. There are a few exceptions to this, and sometimes the fundamentals catch up to price. I mean, Tesla's a great example of that. Amazon was years ago. But that tends to be the kind of benchmark. And so we have this scenario now where you've got a lot of people in who I think are price sensitive. So if the market pulls back, some of them will start to close their long positions. Some of them will be late to the party and have FOMO'd in and will come out of the positions. So you have a scenario where there's a lot of price sensitivity. Now, who's going to kind of move first is the key. Is it the people who are short and are hurting? Are they going to cover? If so, we could have another kind of move. It could go anywhere ultimately, and that could cause more buying and more buying and more buying. If they are staying firm, if they've got liquidity to ride this out, if other short hedge funds are coming in now and are able to borrow stock on a shorting at these levels, thinking, hey, you know what? We can stomach this going to 1,000 if we need to. This thing's coming back to whatever their thesis is, $50. So we are shorting it here. That is that. Then we have this scenario where there may not be any more buying pressure. So it's literally, who knows what's going to happen? Is it going to be the buyers who get spooked first, and the pullback spooks them? They will come out and move on to the next thing, and this thing goes back down to $80 a share? Or is it going to be the shorts that get squeezed even more, and this goes higher? But this is the kind of situation we're in. This is why I love price action. I love supply demand, guys, because it's purely supply and demand. You've got one side, buyers who are pushing this thing higher. And they're kind of making it a personal thing of retail versus institution, but that's by the by. And you've got the sellers here, the shorts, who are potentially adding more to the short position, or are they hurting so much that they're kind of forced to cover, forced to buy, cascading this thing higher? Time will tell. We are currently trading at $3.20 a share, which is, crazily high. We've gapped up. We've kind of pushed lower on intraday here the volatility huge on this thing. But it's still holding at highs at the end of the day. It's still holding at highs. So the question is, do we get more demand coming in? Does this create more hype? Is there more money behind it for fresh longs to push it higher, to squeeze the shorts? Are shorts going to be squeezed out of it and be forced to cover, creating buying and potentially creating a really big spike, especially as a low flow? Or are there no shorts going to cover? Are there fresh shorts potentially going to come in? Is the selling pressure going to come from additional shorts? And maybe these people who are in long from $50 banking profits? Who knows, guys? Time will tell. But ultimately, long term, I would expect this to eventually come back down to where it was before. Maybe it's never going to come back down to the kind of the early levels of like $10, but I would expect it to come, back down to, again, I don't know, guys. I'm just speculating, but I would expect it to come back down to $100 at some point. Does it go to $1,000 first? Market can do anything, and that's the thing you've got to remember about all this scenario, guys. Is the market can do absolutely anything, and we've got to be very careful whatever you're trading that you don't say, well, I can't do that, because new things happen all the time. Anything can happen. Oil can go negative pretty recently. GameStop can rip up massively. There's anything can happen. We're playing a game where you've got to know how you're going to manage your risk if the thing doesn't go your way and you get an adverse price move. Anyway, you'll see what happens in the short term. I think ultimately we'll kind of do a little bit and rotate back and keep going lower, and eventually kind of the hype will come off it. But where it goes before then, anyone's guess. Anyway, guys, take care. Keep your risk managed. I'll see you in the next one. Bye bye.